Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba, and thanks for joining me. Tonight, I'm joined by Mishnah Seth, Head of Frontier Strategies at Aluwani Capital Partners. Mishnah, thank you so much for joining us again.
Thank you for having me here.
It's been an interesting year so far. Specifically, let's, talk to the topic that's top of mind right now. East Africa, the darling of markets, really. Kenya in particular. Yes. Where does the current geopolitical impasse leave us from a macroeconomic setting?
So, you've framed it really well. Kenya has been the darling of Africa over the last 2 or 3 years, when the rest of Africa has really been under a lot of strain, whether it's FX liquidity, slowdown in growth. Kenya has been the market that investors have gone to. But we had an environment where we saw a bit of policy uncertainty last year, and now we've had this annulment of the presidential election, and it's created an environment where we're starting to see a slowdown in economic activity.
Right.
And if we go a step back, actually, we've had a period of continuous deterioration in economic activity out of Kenya. We don't think it's structural, but at the same time we feel that it needs to be decisively addressed. So the current situation doesn't really help, because you've got an environment where businesses in Kenya are now actually taking a wait-and-see approach and further reducing the economic activity that's taking place on the ground.
In terms of, markets' reaction, does that reflect a lot of the uncertainty that one would think is happening?
Yeah, it does, and it also reflects the fact that Kenya has been priced for perfection.
Right.
So you had a lot of EM investors that were hiding in Kenya, and for them, Kenya is less than 1% of their portfolio. So any sort of noise that they're not comfortable with will result in them essentially exiting. So I think that's what we've seen since the end of last week, where a lot of international investors have chosen to step out because we've had a very strong performance, and they just don't want to deal with the uncertainty that's come through.
I guess valuations weren't necessarily looking all that great.
Yes.
So any excuse to pull out, potentially investors are following through with that.
Yes, completely. And we've also had a slowdown in the GDP growth number. It's still around, between 4.5% and 5%. So it's still strong from an African perspective currently.
Yes.
But there is a slowdown. We're also seeing that the local economic activity, as shown by the PMI index, is at an all-time low. Disposable income has come under pressure, and that could be drought-related. So we've had a drought. Food prices have gone up, in particularly maize, and as a result, just disposable income has been tight. But also if we look at the growth in Kenya, so we've had strong GDP growth, but it's a lot of it has been on the back of infrastructure development, and that doesn't really trickle down and doesn't really help disposable income. So we actually need now, whether it's the current president or if we have a change in government, we need an administration to understand that the next 4 years or 5 years needs to be about actually leveraging off the infrastructure that they've invested in, so that we can see a trickle down of economic growth and an improvement in disposable income. And that requires policies that assist with that. So it's not just, you can't just build roads and build railways. You need to be able to generate the activity on the back of that.
You raise such a powerful point, really. The assumption a lot of the time is that immediate infrastructure spend will translate to, call it, an increase in wellness of the general population, and that's not necessarily always the case.
No.
So from a policy perspective, should we be looking at Kenya and almost dismissing this short-term uncertainty as just that, or maybe take a closer look at the current dynamics?
So that's a tough question. So I think it is short-term volatility. But that's not to say that there are, there's still tough decisions that need to be made
Of course.
in order to get Kenya back on its strong growth trajectory, which will see strong underlying fundamental growth.
Okay, that's the big picture.
Yeah.
Let's drill down maybe into sectors.
Okay.
Naturally, banking is a leverage to whatever's happening within the broader economy. What does Kenyan banking look like right now?
Yeah.
Is that an area where we should be paying attention to as well?
Yeah, so I mean, at a micro level, the banking sector has come under a lot of strain. We've seen liquidity tighten. Private sector, real private sector credit growth is actually negative. So if we go back in around August 2015, we started to see a deterioration in the trend with respect to real private sector credit growth.
Right.
And in August 2016, it actually went negative. And between August 2016 and now, it's actually been negative.
Right.
And this has been on the back of, we had 3 banking failures, so to say, in Kenya, which coincidentally, the first one was in August 2015.
Right.
Then we had one in October 2015, one in April 2016, and then of course the interest rate caps, which we had in August last year.
Yes.
And all of this has just created an environment where banks are not lending. They're not doing what they're supposed to be doing. Banks are retrenching, so it's causing unemployment from that angle. But more importantly, for an economy like Kenya, which relies very strongly on credit growth, particularly to the SME sector. It's one of the countries in Africa that actually gets retail lending and does it well.
Right.
And we've seen credit being squeezed out from the retail market, which is putting further pressure with respect to disposable income and has further negative consequences on growth. But the banking sector is also in a tough spot because you've come from a period where you've had 3 bank failures, and you have seen a tightening of liquidity in the sector, and I don't think that gets resolved overnight. So it is a process that will, I think, take another 12 months.
What's driving that tightening? Is it really a function of increasing non-performing loans coming from, I guess, this slower than expected growth in disposable income?
Yeah.
Or what's driving this liquidity, or is it just a case of banks themselves wanting to shore up their balance sheets?
So if we go back to the banking failures that we've had, in some instances we had very poor corporate governance, which resulted in poor lending practices, which resulted in NPLs in some cases of around 50%.
Wow.
And so, the central bank had to step in, and rightly they did so. But it then creates an environment that's quite uncertain. And at the same time, liquidity within the sector has dried up. So some banks don't have enough liquidity on their balance sheets. So therefore, they go into the interbank market. Interbank rates spike. So we just find a very tight environment, particularly for the smaller banks in Kenya, which means that it's. And then, with the interest rate cap, it further put pressure on the ability of these banks to attract deposits because there was a flight to quality. So it further worsened the problem that we had in Kenya. And I think in order to see a marked improvement with respect to the banking sector, we will need to see some sort of a repeal of the interest rate cap or some sort of a revision so that banks can actually start lending and confidence returns to the sector overall.
Okay, given these question marks, which sound almost strange for Kenya in particular, what are the implications given that one of the things that East Africa has been particularly good at is this regional integration? What are we going to see in terms of the effect on the rest of the region from any particular drop in economic growth within Kenya or concerns around banking sector as an example? So
I think we're still okay. It's but if we have a situation where we see a stalemate with respect to growth in economic activity due to the current political situation. So, you know, people just don't invest, and we get to a situation where we don't have an understanding of policy certainty up until, you know, mid next year. Then it will have a broader impact for Kenya and the region. So it's really how they handle the current situation and how decisive they are in finding a solution with respect to politics and then policy going forward. So, you know, Kenya has been very good thus far. They understand the type of policies that are required for foreign direct investments and portfolio investments. So you wouldn't expect that to change, but it really needs to move, I think. That's the key message here.
I guess just to entrench that question a little bit further, is, from an investment perspective, is your view or an investor's view on Kenya necessarily imply that should be your view on the region as a whole, or is it a lot more nuanced than that?
No, it shouldn't.
Okay.
So, you know, each country has its own dynamics.
Right.
East Africa as a region, you know, there is integration there, but I don't think it will have a significant impact across the region. As an investor, particularly, you know, when investing on the stock market, besides the operating political environment, we also look at pricing, we also look at the underlying dynamics of the companies that are operating in the various markets. So, you know, you can find investment ideas, but having said that, as it currently stands, we are cautious on the region and particularly cautious in Kenya. So, you know, prior to the elections, we did take some risk off the table because we just felt that the market was priced for perfection. And we're not sure if we're at a stage where we can actually go back into the market until we start to see some certainty with respect to policy and the political environment.
So I guess as always,
or if prices fall significantly, you know.
As I was just about to say, you know,
Yes.
I mean, ultimately, I guess the dynamic is between economic growth and prices, and how both of those things ultimately affect operational performance. So overall, what would need to happen in the region for you guys to be excited about it?
We would either need to see valuations fall off significantly.
Okay.
As an investor.
One way or the other, yeah.
Or we would need to see a very strong policy direction come out of Kenya.
All right, perfect. Let's leave it there. Thanks to my guest, Mishnah Seth, Head of Frontier Strategies at Aluwani Capital Partners. That's all from Buy Africa this week. Remember to follow me on Twitter, that's at Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.